Good afternoon, everyone. Welcome to another Sunday Stock Talk with Rich. I'm just going to be testing the audio, making sure we're good, and then we're going to get this party started. So please let me know if you guys can hear me well. I see 25 people in the chat. That's great. Thanks for being here. Oh, there we go. I got audio. Okay, so we're good to go. Again, thanks for joining me on Sunday. And we're going to be doing a lot of fun stuff, looking at a lot of charts, and talking about the state of the market and what's coming next. Hi, Snake Trader, welcome. Okay, so the first thing that I want to do is I want to look at the futures market, and I want us to do the analysis together. Okay, so I'm just going to clear up a few of my notes here, and I want us to do this analysis live. So let me get rid of some of these arrows and stuff that I have. All right. So the first thing that I like to do with futures, as always, is I like to draw the previous week's high and the previous week's low. So that's always the first starting point. So if we go here, the high is 39.7850. So I'm just going to move this here, 39.7850. So just make sure we have it there. And then we're going to look at the low. The low was 38.75. And we're just going to bring this line up here and we're just going to draw it like that. So 38.75. Okay. So there we go. Now we're going to go down to the hourly chart. Okay. And we can see that the open, okay, the open was within the previous week's range. So what that means is there's likely to be some form of consolidation because no one has actually taken control of the market. Okay. So also just drawing some fibs here. So you could see right around this 236 level, high Delfino, which lines up with a right around 3,900. We have a little bit of resistance. So let's talk about the trading setups. What were the trading setups so far? So there was already a winner that I can see. And I'm going to go through that. So if you guys can see the winner that I'm talking about, please comment in the chat. Okay. But what I'm going to do here is explain to you guys this trading strategy called the gap fill. Okay. So if we go down to a 5-minute chart, we can see it a lot better. It's a lot more detailed. So we closed here on Friday. Okay. So if we look at this very closely, let me zoom in. The low is 38.96 of the last closing bar. Okay. Now the gap fill is when we open with a gap, but we retrace the gap. We fill the gap. And you guys see this? If you look at this wick very closely, it went all the way back up here. It filled the gap and then it went all the way down, right? So what a beautiful gap fill strategy. So let's look at the high. So the high was 38.96 and this low was 38.96. So my friends, that is proof of algorithm trading. That is proof of what I'm talking about here. This concept of the gap fill happens a lot, and we can clearly see it right here because the close was 38.96 and the market at the open retraces all the way to 38.96 and then it rolls over. So how do we actually take this trade? Well, this is what you do. So you go short, okay? You put your short order on 38.96. So you're going to go here. You're going to make sure your entry price is 38.96. And where I like to put the stop, either right above that closing bar's high like this, or if you want to be conservative, you can put it a little bit more above, like using previous resistance over here. Either one is fine. Okay. So let's say we did a textbook gap fill play. We shorted. We had the limit order. The market came. It touched our short, filled. Stop is up here. And look at this. So let's just say we were able to get right around here. We don't get the exact lows, but we get 4R. What a beautiful trade. So if you risk $1,000 right here, guys, if you risk $1,000 right here, that's a quick $4,000. Really, really easy money. That's 11. And if you're doing points, that is a total of 7 points. Okay. And you're only risking 1.75 points in order to make 7 points. So very, very good trade. And you can also see, again, friends, when we come back up to the gap fill, look at the resistance. You see how we roll over again? And look at this. at the gap fill, what do we have here? We have a inside bar. Absolutely stunning, beautiful inside bar. So why don't we just short the inside bar then? So let's just short the inside bar. Okay, let's short it right on the low, put a stop on the high. Another beautiful trade. So 3R easily, and it's still going. So you could have taken these two trades and then just been done for the whole week. All right. So I hope you guys, do you guys understand? Let me know if you understand the concept of the gap fill. It's a very powerful trading strategy that I've backtested and that I personally trade a lot. So let me know if you guys understand it. And if not, we can go through it again. But so far, very, very great trading opportunities. Okay. So let's just look quickly at the NQ and see what's going on there. Okay. So the NQ, it opened right here. So you see how the NQ didn't actually gap. So the NQ actually opened within the candle. It did not gap. So that's a little bit different right over here. So this is a little bit different because NQ is actually showing a little bit more strength than ES for the first time in a long time, which is very interesting. So we have to keep an eye on that because that's something that we haven't seen for the past few weeks. We've usually seen NQ rolling over a lot. Hi, what is the meaning of the gap filled? The meaning of the gap filled is basically where we close, okay? So right here, where we close, okay? The market is actually coming back to where we closed and using our close as resistance. This is an algorithm type of trading where it pulls back all the way to the close and then it continues to roll over. So this is what we call the gap fill. Here's the gap, okay? You see here, this is where we opened. Right here, this is where we opened. So you see there's a gap, okay? There's a gap between the open and the close. And the market runs up, fills the gap, and then rolls over. So that is the gap fill trade, okay? Very, very powerful trading strategy. Very, very powerful. So what we're gonna do now, friends, is we're gonna proceed to look at the requests. We're gonna look at the stock requests. I'm gonna share some swing trades that I have and my plans for next week. But definitely, you could be a trader that just trades on Sunday at the open and be done with it. Okay. Hi Ganzi, welcome. Hi Mohammed, welcome. What is your go-to trade when we open inside previous day's range? I have many, Mohammed. I have many. I have my triangle system. I have many different ones. So buy puts in such a scenario. If we gap down, right? Well, first of all, I won't be using options. I will be using futures contracts. So you can't get the options right now because the market is closed. So you can't buy puts unless you're buying futures options, which I don't do. I would rather use short using ES or MES. Okay. Hello, Andrew. Welcome. Okay, so let's start with the chart request. Let's work our way down. And then I will also get to any of the requests that you guys have in the chat. Okay, so let's start. All right, so does that make sense though? That's a free trading setup, guys. And what I want you to do from here is I want you to do some more research on the gap fill. And I want you to try to apply it to your trading moving forward. But most importantly, I want you to do a back test. Okay, guys? So what I want you to do is every Sunday, I want you to go back every Sunday and I want you to test the effectiveness of the gap fill and you tell me if it's a profitable trading strategy. Okay? So as good traders, we must always do our due diligence and we must always back test before we trade a setup, right? We just don't trade something blindly. We must know the statistics. So what is the win rate? What is the average winner? What is the average loser? What's the drawdown? What's the win streak and the losing streak? So you must document those. Okay. So NNOX here, we had a great inside bar from last week, which produced a nice winner. So if you had taken this break of this inside bar last week, you would have been able to get some money on this trader, which is already great. So from here, what the stock is trying to do is, you see how we have a rejection right at the 20 EMA right here. So there are shorts here, the algos. And if we draw a Fibonacci from the high to the low, we still have some room to come up to the 382 and to the 50. So really, this low here must hold for the bulls to continue. If we start turning around, then we can see that the 20 exponential moving average was the major resistance, and we can roll over from here. Okay, so where were we? PDD. Okay, let's look at that. PDD. So this stock had a very good run, and this is a very dangerous candle here. This is what we call a trap candle. So if you can see here, friends, we had this hammer bar. The next week, we broke the high of the hammer bar. So many bulls went long with this hammer bar, thinking that we were going to go to all-time highs again, right? However, what happened is we broke the high and we turned around. So this, my friends, is called a trap candle, all right? When we break the high and we turn around, we know that there are trapped bulls in this trade, right? So what I will be looking for is to bracket this high and the low of this week's range and to see which side we break. Which side we break of this candle will be very important for the next leg, okay? Delfino says, retest gap is similar to gap fill. Exactly. Very, very similar. Exactly. It's the same thing. Okay. So let's also draw the Fibonacci. See if we have some confluence. Yes, we do. Right at the 50. Beautiful. This is why we bounced here, because the algorithms were loading on the 50. We bounced. Honestly speaking, from an algorithm perspective, they might have already made enough money to close this trade. So let's see if the algorithm would take the 50 and risk off the 618. They already made 1.5 times their money. So they could have put $1,000 risk in this 50 versus 618, and they could have already taken profits. So be very careful here, because now we need to determine, has the algorithm left the market? So how do we determine that? Well, we must look at this range, okay? So we must see how this range develops next week. Very good. Okay, so let's look at CAN. Beautiful inside bar here. I don't know exactly what these stocks are. It says ADS, blah, blah, blah. I don't really trade any of these ADS or ADRs or anything like that. So I'm not really familiar with what this is, like what type of instrument this is. But anyways, from a technical standpoint, we have a beautiful inside bar close. So how do we play this? Well, if we break to the upside, long. If we break to the downside, short. Very simple, okay? It doesn't get easier than that. That's why I love the inside bars. Tesla, Mgm, and KHC. So Tesla and KHC, I can't talk about these ones because they're already posted, and the entries and stop loss and targets are already posted in my private room, so I can't bring those up. Mgm, we can look at that one. So let's look at this one together. Yeah, so MGM, there's not really any technical setup for me. We're not pulling back to a fib. We're not with an inside bar. So there's nothing really for me to look here for a particular trade. If we were down here, then that would be totally different. So not really interested in position here, just because there's no technical setup for me. Okay. Okay. Shop and PayPal. Okay. Yes. So Shop, again, was a very great example of a trap again, right? So if you guys have noticed, the market has been a lot more difficult in the last few months. Basically from the end of February, middle of February, the market has been very difficult. Do you guys feel like that? If you think the market has been very difficult, let me know in the chat. And let me know how you're doing. I'm interested. And the reason why the market has been very difficult is because we have a lot of traps. We have a lot of false breakouts. We have a lot of indecision, right? So if we look specifically, we had this insight bar on the 8th of March, right? And we broke to the upside and we immediately shut down. This is what we call a bull trap, okay? So how do you play the bull trap? Well, now you have the bull trap. You know the bulls are trapped. So what we can do is simply bracket this candle now, okay? We can wait for the resolution, because if we break through the high here, then the bulls are actually back in control. But if we reverse here, we have a continuation of the bull trap. So this is what we call a false breakout. You see this? Break and pull down. So imagine any of the bulls that went long here, they have gotten hurt, right? So yeah, range bound action, haven't been investing much. Yep. We're all on the same page, guys. In January, on my swing trades, I had like an 85% win rate because everything was directional, and now we are range bound and choppy. But that being said, there are still tickers that are making great moves. So while we're on that topic, let me pull up eBay. eBay was a trade from last week, guys, in my private room here. This was the exact trade. And I just want to show you that not every stock is going to move the same. Okay. So let me get rid of my fib. And here was the setup on eBay. Entry was $56.91, stop was $55.02, and the profit level was $60.12. Well, the first target is always at 1-to-1. So the first target was right around here, basically. But what I want to show you guys is, you see, this is what we want to see when we trade. We want to see a continuation. We don't want to see a breakout and then a reverse, because that will be an indication of trapping. This is what we call a clean breakout. So my friends, what I advise you is, do not put your eggs into one. Don't put all your eggs into one basket. So when last week, for example, I probably traded close to 10 to 20 stocks. So I spread my risk out, because you don't know which one's going to be the winner and which one's going to be the loser. You don't. So the best thing for you to do is risk small on many stocks instead of risking big on a few stocks. Does that make sense? Let me know if that concept makes sense. So let me repeat that. Risk small on many stocks instead of risking large on a few stocks, because we are in the situation right now where the market is very difficult. So we must spread our risk out across many different names, and we must also not invest heavily in one particular thing. Okay? And the other thing we can do when the market is tough like this, the other thing we can do is day trade. Okay? So please remind me by the end of this call. I will go in detail in Friday's trade and what I did on Friday and what I presented in the Telegram. I want us to go in detail, because I also want to show you how to hedge yourself from a day trading perspective. Okay? Okay. So let's go back. PayPal. Okay. So while we're looking at PayPal, this brings me to my stock list. Okay. So I spend between 2 to 4 hours every weekend going through the market and preparing orders for the private room, and also just analyzing stuff. So right here in the orange list is all of the stocks that I have orders for already in the broker, and these are in the swing room for next week. The purple list I want to share with you guys today, and I want to try to expand your trading knowledge, and I want you to see things a little bit differently. Okay? So we're going to start from Apple. Okay? So this concept, what I'm about to show you, has actually come to me through just really trying to break the box and do something differently. Okay? So what we normally have when we trade, we have standard time frames. Most people are on the daily chart, the hourly chart, the 5 and the 15. And when it comes to swing trading, most people are on the weekly and the monthly chart. So what I decided to do is I decided to add these custom time frames. So do you guys see these custom time frames here? I've created them: 2-day, 3-day, 4-day, 2-week, and 3-week. So I scanned the market today on the 2-week chart. Okay. And I came up with this list that I posted so you guys can use this list as well. These are all the tickers that actually have an inside bar close on the 2-week chart. Very, very impressive. Because what it means, friends, is that for 2 whole weeks, okay, remember this now, for 2 whole weeks, Apple has traded in a tight range. Look at this range. Okay, so let's measure the range. Okay, the total move on Apple in 2 weeks was up and down 6%, which is very, very, very small. And we can go to the daily chart and we can see this, just the chopping. Okay, so what does that mean? What does it mean? Well, it means that there are a lot of trap traders. A lot of option premiums were destroyed. If you did options last week, let me know how it went. Let me know if you do it. I'm not an option trader, but I have people in my room who trade options. I prefer stock, but if anyone in the chat traded options last week, let me know how it went. Was there any way for you to avoid the option decay? Because I really feel that the last few weeks have been targeted to destroying option premiums. Sniper Wolfgang, this is a great question, friend. Why do traders pick random periods? Weekly, no good. Look at 2-week. If not, look at day or 3-day or 5-day at 12-day. Feel like most just go with anything that fits. All right. So Sniper Wolfgang, I very much appreciate your question, and I'm going to give you an answer. Okay. This, see this? This is my back test. This is my confidence in the different time frames. I do my due diligence. Okay, so let me go back. Oh, it's over here. So I do my due diligence on the time frames that I trade. I don't pick a time frame because I want to just try something else. I pick a time frame because I've done a lot of back testing. So the back testing tells me that these time frames have an edge. And anything that I share with you, friends, you better believe that it's been through back testing. Okay? So that's why I'm confident in the time frames that I'm showing you. It's because I've tested them and I have the data to support my conclusions. All right? So make sure that if someone's presenting something to you, especially a new setup or a trade or something, ask them what's the back test results say. So I can tell you that these inside weeks, these double inside weeks, have close to 50% win rate. And as many of you know, my risk to reward is always positive. I don't have an inverted risk to reward. So technically, I only need to win 40%, 30 to 40% of the trades in order to walk away with a profit. I respect that. I was a day trader for a long time, got into swing, and finding time frames to follow seemed like a battle in itself. Day trading, I use 3-minute with eye on 10 and 1 hour. That's it. Yep. And if that works for you, that's great. You know, like for me, when I day trade, I only look at the 5 and the 15. But when it comes to swing trading, there's multiple different time frames that have success. But you need to do the due diligence and understand what the win rates are. Okay, guys? All right. So we're going to continue with some of these picks here. I think the reason why I went there is because PayPal was also a 2-week close. That's why I went to this. So PayPal was a 2-week close right there. You see that? So that's a very, very interesting setup there. So look at the last time PayPal had a 2-week close. You see that? The last time, look what happened. Okay. We don't know if that's going to happen, but if we look based on the chart in the past, we've had good action. So it's worth it to take a chance, right? And again, we will not bet the house. We won't bet everything on the trade. We'll bet small in multiple trades. So Michael says options daily trading was fine, good. Weekly swings was bad. Exactly. Yep. So we're going to talk about the day trades as well. So what we're going to do now is I'm going to go to SPY and I want to talk about the day trade. And if you have any chart requests, please post them in the chat there. So CPNG. Yeah, I don't have any thoughts on this because there's not enough price action for me to use as a trend or to determine anything. But I did see a nice inside bar here, which had a nice short. AMGN. Let's go to the weekly and see if we see anything. So don't really see much, but definitely see a lot of manipulation up here at the previous all-time high. And if we can get back up into the zone, then we can break through. Do you play IPO breakouts? No, I don't. I have my own system and I trade it. I only trade my systems. I don't trade anything else because the other ones like IPOs, for example, I don't know what the win rates are. So I don't trade anything unless I know what the win rate is. Solo, look at this. Very great double inside bar pattern. I really like this. Look at this. So let's draw it. Take it like that. And we can take it like this. So a very beautiful consolidation like this. So how we can play this is just bracketing the bar. If we break to the upside long, we break to the downside short, right? The only thing that I'm a little bit nervous on is if we look at this stock in the past, it's a highly manipulated stock. So you want to be careful when you're trading these tickers because, you know, they can do whatever they want, pretty much. Okay. So the last thing I want to talk about, friends, is SPY. I want to give you guys I want to talk to you about the day trading that I called out and the concept and everything. And then we will wrap it up. Okay. So I had a coaching session today with one of my students, and we did a good exercise together, and I wanted to do it with you guys. So here's the 15th of March. This was Monday. Okay. And then here was Friday. So this is the price action throughout the week. So for those that are on Telegram, you know that I called out the opening range breakout short on this day. So we shorted here and we got about, I think it was 12 points. Okay. So a pretty good trade. So what I want to do though, is I want to talk about the concept of the opening range breakout and when to use it. I want to give a little bit more detail on it. Okay. So here's Monday. Okay. Here's Monday. So we had a push down and a rise up, and the bulls were in a lot of control. Then Tuesday, pretty much just kind of tight consolidation. Wednesday was the very important day. It was the Fed day. Okay. So Wednesday was the Fed day and the bulls took control of the market. All right. And on Thursday, we consolidated and rolled over into the close. So now on Friday, when we gap down on the 5-minute, do you think that there are some bulls that are very trapped? What do you guys think? Because there are many bulls that do not honor their stop loss. There are many bulls that don't even have a plan. So what a typical new trader would do is when the Fed news goes and we pop up, they will buy here or they will buy here. Okay. So we know there are new bulls that are trapped. They bought here, they bought here. And then when we open on Friday, all the way down here, we have a large trap. So this is why the opening range breakout is a very good play, because we've identified together that there are trap traders. And this is why we'd love to use the opening range breakout. Okay, because we want to catch momentum right away, because we know all these trap bulls, what they could have done is waited for the first 5-minute bar to close and they put their stop loss down here where they can't take any more of the pain. So they put their stop loss here, and then when that stop loss breaks, you see this flush, very clean flush. 12 points. So that's how we take advantage using the orb. And then in typical market maker style, after the new traders take their stop loss in pain, the market makers come and buy it back at a lower price. So it's very important to look at the price action for the week. And especially on Friday and Monday, we need to look and see, is there somebody trapped immediately at the open? Then I can use the opening range breakout as a great play. All right. So I hope that makes sense. I don't see any questions in the chat, but this is also, excuse me, this is also the concept what I want to talk to you about hedging. Okay, so let's say our main portfolio is long with swings that are long. We can take a short on the Friday open and take that down to make a few points. In this case, let's say a minimum of 10 points. And the money you made from your short will protect any of the potential losses that you might have on your swing trades. Do you go long or short as soon as the first candle breaks? So I have a video on the opening range breakout on YouTube if you want to look at a little bit more details. But what the opening range breakout means is when whichever side of the range breaks, this is what we take. Okay, so because we broke to the low, then this is a short. If we broke to the high, we would be going long. Okay, that's what the opening range breakout means. So Rizwan wants to look at NEO. Yeah, so NEO again was another trap. So that's why I didn't play some of these tickers last week, because I knew that these traps are like, here's an example, right? Let's look at this one and let's look at this one. They look pretty much the same, right? So here you could see a false breakout trap and then a big bam, big rollover. So it could also be setting up, if the market wants to be more of a bear than a bull next week, then these are it literally could copy and paste this right here. That's potential. But if we start turning around now, start basing, start consolidating more, that will give the bulls the strength they need to potentially move higher. Okay. So we went through a few swing trades. We talked about the futures trading opportunity. I taught you guys the gap fill today. I taught you guys opening range breakout today. So I feel like you guys got a lot of value from here. Some free trading setups, and also the list that I have here in the purple column. These are all the trades, swing trade that I'm looking for next week. And I want you guys to have them on your watch list and to be just monitoring them. You don't have to trade them, but try to monitor them and learn the price action. Just try to learn it. Okay. Does the orb work on ES futures? Do you trade it the same as SPY? I've seen your charts for ES has all trading hours and not only RTH. The first 5-minute bar in ES and SPY are the exact same bar. So it's the exactly same strategy. Whether you use SPY or you use futures, it's the same exact bar. Okay. So the bars are the same. They're both the S&P 500. Do you play any chart patterns, i.e. head and shoulder flags, inverted head and shoulders? Hasham. Like I said, I have my back-tested trading strategies that I use. I do not deviate from them. I have my Fibonacci's that come from my book, and I have my inside bar and my limit system. So those are my three, and I do not deviate from those at all. Okay. Delfino had one more request. CSIQ. Very good double inside bar pattern here. Very, very good. Looks really, really good, actually. And we can see that if we look at this, right? If we look at this, okay, we actually had this breakout from basically the previous resistance was in January of 2014. We've broken out and now we're retesting. So looks very, very good. So how you would play it again is just bracket the inside bar to the upside or to the downside. Do you apply to any other stocks gapping up or down? Yes, I do. And if you look at some of the past videos during the week, we go through the stocks and I talk about the orb and the inside bars and the different plays. So yes, definitely do apply them to stocks as well. Definitely do day trade stocks as well. Futures is just one instrument. Like I said, spread the risk out through many different instruments. Sobering. I do not trade setups that I have not backtested. My homework is set. Yes, the longer you are in this game, the more you realize that if you're not trading something that has a backtest or you have experience trading with real results, you might as well take your money and go to Las Vegas and have a good time, because you're not going to have a good time in the market. That's for sure. If you're system hopping in the market and trading different things, and randomly one day you do RSI, one day you do MACD, and then one day you do Elliott wave, you will suffer in the market. So in that case, I suggest you take your money and have a good time with it, so you don't have to take the stress. Go to Las Vegas. I can meet you there. We can have some fun. But when it comes to trading, when it comes to stocks, it's strictly business. Strictly business, no emotions. And we must know what our expected revenue, what our expected expenses, what our operating costs, like that language is pretty much the same thing, but looking at it from a different perspective in trading, right? So just treat it like a business and you will be successful. I'm sure you have covered it before, but where do I look for / identify a way to identify change of direction? Well, Steve, that's a very broad question. There's many ways. You can use the inside bars, you can use the Fibonacci. But I definitely suggest going to my free strategies on YouTube. I have my free strategy playlist, and start watching those strategies from the beginning, because each one of them has a different way to deal with momentum. But we don't need to worry about which direction the market's going. What we need to worry about is, if I'm wrong, how much will I lose? That is the question you should ask. So start there first before you try picking the direction. Figure out what's your risk management plan first. Then you can look at that. Okay? I have a video on risk management as well, so you can look at that. Yeah, skills, retest of the 20 EMA. So definitely this is a sweet spot, and we can already see the algorithms have already bought it twice. But again, there was a bull trap. So this range from last week will be very important. No, thank you, Steve, for the question. All right, guys, that's it for me. I really appreciate your time, and I really hope this was helpful with some of the strategies. And feel free to do some back testing and come back next week and share the results with the group. And let's help each other as a community. And if we all do a little bit of back testing together, just imagine where we would be, right? If we work together. And this is the trick in the world, is working together with your community. If you can do that, you can get very, very far. And from my trading room and my Discord and stuff, I have a community of traders, and that's how I'm able to succeed, because we share ideas with each other. All right. So definitely going to be a very interesting week. Very, very interesting. Okay. So stay tuned, put the seatbelts on, and do not risk more than you're willing to lose. And that's the last thing I want to leave with you guys tonight. Remember this. Do not risk more than you're willing to lose. Okay? Have a great night, folks. All right? Thank you very much. Thanks, Delfino, Gonzi, Support Engineer, Snake Trader, Joe, Mohammed, Bill, Francisco, Tom, Daniel, Rizwan, Prab, Steve, Fares. I appreciate every one of you. Thank you very much. And Andrew, thank you. Take care.